Welcome to today's edition of the section 6 of Trading World London Session Open. My name is Alejandro Zambrano. I'm the Chief Market Analyst with TradeCaptain.com. Good, so I can see that we're up and running. So guys, let's just get going. I'm going to provide you guys with a quick update on the markets, as we usually do here at the live training room, Monday to Friday about this time, which is 9 a.m. London time. And we're going to take a look at things like the euro, Bitcoin, gold, crude oil, and the DAX 30. Before we start though, we need to let everybody know that trading financial markets unfortunately is risky. There's a risk that we lose all of our invested money. As well, if you do like this presentation, don't forget to like the video. You click on the title, you get sent to YouTube, and you can like the video. As well, you have here the technical analysis section. You can find more analysis like the one I'm going to produce here. As well, today I'm going to talk a bit about the Delta Trader program. I think some of you guys have heard about it, but Amana Capital, which is the parent of Trade Captain, has launched a new, call it a contest or evaluation program, where 10 top traders will receive 100,000 to manage if they do good, and after they manage the money, they can keep 20% of any profits. So we're going to talk a bit more about that. If you're too eager to find out about this, then check out Amana Capital /Delta. That gives you more information about this. It's different. Okay, I'm going to tell you this already right now. It's not like your normal sort of demo or real account contest where you need to sort of get the highest percentage. And I think nowadays it's literally like 400 or 500% you need to have to be able to actually win. It's not like that at all. It's how much return you produced divided by the risks that you actually took, and that gives you the profit factor, and which needs to be higher than 1.5. And then there's some 2 other factors as well that they measure, but it's not about the one that could make the highest percentage return. And it doesn't matter if you have the smallest account, which is 1,000 or 100,000 or 1,000,000. All the accounts are treated the same because we're looking at ratios, which is return divided by losses. And we'll talk more about this after the end of the main presentation. So let's just begin, and you can quickly see here just by looking across the board that we're having dollar strength. Dollar is up against the euro, the pound. You have the dollar up against the Aussie and the New Zealand dollar as well. But you can see is that the dollar yen here is down with 0.75%, and you can also see that gold, also crude oil is down, and S&P 500 is down quite a lot, down by 1.31%. Nasdaq down by 1.32%, and the US 2000 up by 1.22%, and the DAX down by 2%. So you can see this is sort of a typical risk on, risk off situation. Well, obviously this is risk off. The dollar is gaining, but the yen is also gaining, and stock markets are declining. So the market shifts from this sort of mode to like a pro-growth move, which you tend to see the Aussie dollar, New Zealand dollar gaining, emerging market currencies, and also sometimes the euro dollar and the pound dollar and dollar yen definitely going up. And sort of the characteristics of the market change, unfortunately, quite. I mean, when they change from one mode to another, and it's a bit difficult to say when that's going to happen, then the market sort of rallies crazy lower, and then when things go back to normal, they gain a lot. So much more volatile. Now this is the euro, and the euro is still capped by 118.53, which is this high. And my idea, since we traded lower on Thursday last week, is that I want to be bearish, and there's two levels I want to be bearish. It's either on a break to 115.08, which is the May low here, created this low on May 29th. I think if we take this level out, we take out this daily low, and the market continues to move to the downside, most likely to 13.12 down here. The alternative is that the market goes up a bit, maybe up to 16.76, and then from these levels look to reverse. The benefit of this sort of move is that the risk reward ratio here, you risk about 186 pip. If we go down, you make 162, and if it tumbles, you make 358. So 358 by divided by 186, that's 2 times your money. So that's sort of the best option, really. Here's Bitcoin. Bitcoin had a leap higher yesterday, 5 p.m. London time, and the very short-term trend defining, or the very short-term downtrend, is under pressure. You can see that on this 4 hour, the price created high here, another high here on June 12, and then if we take out this level, I think the market's probably gonna go up a bit, and then probably down, and then we'll see what happens. But the immediate sort of down pressure would end here, and it doesn't necessarily mean that we're gonna rally much higher. So I would just turn neutral on a break to this level. For now, though, the trend remains bearish, and there's absolutely no reason at all to change the bias here. As long as we're below 69.62, this trend is bearish, and I suspect this market can continue to move to the downside. We're just in a short-term corrective phase. As you can see, this market is moving up, but take out this little trend line, and this market is most likely gonna target 59.19. Here's gold. Is up by a little bit, not a lot, and if you look at it from a bigger picture perspective, the trend remains firmly bearish. The price created a high here, and high here, and high here, and the market was in a corrective move, a bit like Bitcoin is right now. But then eventually the market took out the June low, that caused the market to tumble. Maybe with stock markets moving lower, we'll see a bit of a bounce, but I don't really suspect that that's going to happen right now. But if it does move up to 12.89 and maybe 12.95, then I think traders will most likely look to sell. The longer term macro fundamental trend remains bearish for gold, and has been bearish for gold for many months. The reason for this, of course, is that the Fed is intensifying its rate hikes, and that's putting pressure on gold. Here is crude oil, and crude oil had a very brisk correction yesterday. Went up really too easy, really, for my liking. But the market is still reversed sort of in this range. This range is derived just by taking Fibonacci from the trend defining high to the latest low, and the idea was for the market to reverse. And right now it created that high, and hopefully it could easily move up higher. It could easily spend like a week here. Not that I think that that's going to happen, but as long as you're below 67.25, then there's no point of worrying. I know it's easy to say, and it's very different if you're in the market, but you just need to not worry as long as you're below this level. And then hopefully this goes down, then maybe up, and then down to 61.80. And as soon as it looks like we gonna take out this low, then most likely you can reduce the stop loss to this high. Here's the German DAX, and the German DAX had a bit of a bullish bias following Friday's push to the upside. Sorry, Thursday, that is. The reason for move to the upside is because of ECB. They are not gonna aggressively increase interest rates. So the market moved up, but then after that it plummeted, and I think it's because of trade wars. I did not actually have time to read up on the news. It's not necessary to always know about what's going on in the news to be able to trade successfully. Now the market is testing the May low, and if we take out this level, this market might decline a little bit lower, but I don't think this is a good market to work with. Why? Because to begin with, it's trading sideways. Number two, it has this very wide range. It's sort of volatility is expanding, it's not really contracting, and we're not having a trend. So to give you an idea, when the market moved to the upside, it looked like it was going to head to the higher, but that did not work out. And then it moved lower, and then up, and then down, and then generated a sell signal here, but then the market moved to the upside. So you have both bullish traders and bearish traders getting hurt. Nobody is making money here, at least if we look at this from at the daily chart. Of course you can make money on it in the short term. I mean, I turn bullish here for this to head to the upside, and that worked out fine. And I think if the market continues to trade to the side, we could potentially again sort of break the upside or break the downside. But until that happens, you know, there's not too much to do, and I would actually prefer to not focus on this market because it's very easy to get chopped up here and just lose money. When the market goes sort of changes its mood from one day to another, creates opportunities, but it also creates problems. And the problem is that the market is doing exactly what the DAX is doing right now. For a few weeks it goes all up, for a few weeks later then it goes all down. Of course, if you can buy and then it sort of just goes your way, then that's very easily. So if you have either everybody's in panic mode for 2-3 weeks, a month, that's relatively easy to trade, and then you have 1 month of everybody being happy. But when it sort of shifts this quickly, you know, everybody being optimistic on Thursday last week and now everybody's being pessimistic about the market, then it's very, very difficult to trade because the markets behave differently in these different two states. And the best thing at that time is actually to take a step back, look at the bigger picture, looking at bigger levels, and that's exactly what we're doing here with the German DAX, not getting involved in the short term. Okay, let's see if we have any quick questions. So we don't have any quick questions, so what we're going to do now is going to talk a little bit about the Delta Trader program. The Delta Trader program, if you trade well, you could potentially manage up to 100,000. There is a pot of 1 million each quarter, and all the top 10 guys that meet the minimum criteria, they get the ability to manage 100,000. And the criteria are the following. You look at the profit factor. You need to have a positive profit factor of 1.5. Your average trades, you need to be right about 45% of the time. So if you trade 100 times, at least 45 or 45 of these trades needs to be winners, 55 can be losers. And then the sort of the challenging part for some people is the risk reward ratio. It needs to be at I think it's 1.5. So it's actually not that challenging. The issue is that, for example, I have a risk reward ratio about 2%, 2 times up to 3 times sometimes. If I look at data from December, it's about 3. If I look from January, it's about 2.75, 2.5. But my winning percentage is 41. So obviously in my situation I should trade maybe less, and then I could qualify for this, so sort of focus on better quality. So it's not that easy, but it's also not impossible. When we've done tests in the past here, then we will have a few winners. And why would you even bother with this? Well, imagine you have an account and you have $2,000 in it, and then you trade and you produce a return of 10%. You do that in 3 months, so that's a $200 return, right? But if you're trading with a 100,000 account, then 10,000, that will be a 10% return. And out of these 10,000, you keep 20%, and that is 2K. So you trade on your own account, you make 200, and you trade with a Delta Trader account and you make 2,000. And then of course if this grows and grows, then you know, you keep more and more. So it's a great benefit if you're trading with a smaller account. Of course, if you're trading already with a 100,000 account, then you might not be bothered, unless of course you want to prove yourself. We do actually have hedge funds or money managers that have joined this contest as well, and I think the reason is what they want to prove themselves. Why? Because this money is coming from this fund, which is called 514 Capital Partners, and that is a small fund based in the Caymans with several $1 million under asset management. And for example, some of these funds or smaller money managers are joining here to sort of prove that, you know, look, I can do it, maybe give me a part of what you have here. So the different reason why people join. But obviously 99% of people that join are joining just because you can trade with a bigger account. And as well, if you trade very well, say that you manage the money for a whole year, who knows, you might receive a phone call from 514 Capital where they want to get to know you a bit better, and who knows what might happen there. Maybe working directly with them or managing even more money outside of the Delta Trader program. The only catch is that you need to trade with real money. So you need to trade with real money. Minimum account size with the mana is $1,000. So $1,000, and that's all fair, I think. If someone is gonna, if I would gonna give 100,000 to somebody, then obviously people on demo accounts would not be counted. But if someone is trading with a real account, and then they can manage 1,000, then maybe they can manage 100,000. So that's the only sort of limitation here. It's not free money. You need to work for it. Okay, for more on this, you're most welcome just to send me a message, or you can just go to Amana Capital, and there's a button up here which is called the Delta Trader. It's better to join early when the competition is in the hundreds, rather than waiting too long when there are thousands in this 1,000 enrolls. Why? Because you'll be competing with 1,000, but if you're competing with a few hundreds, then it's easier to actually having a chance of actually managing. Why? Because every quarter they evaluate everybody, and if you met the minimum criteria, then they're gonna take the top 20, okay, the top 10. So obviously, in the first round, if you're in the top, but you're not in the top 20, then you miss out. Then you would need to wait another quarter. And then if you're still in the top, then you could potentially be allocated an account. Okay, gonna wrap things up. I want to thank you so much for joining. You can follow me on Twitter if you have any questions about this or anything else. This is my Twitter handle, AlexFX00. So twitter.com/AlexFX. You can send me direct messages. Usually just this little button here, like 3 dots. You can click on that and send me direct messages, or you can even send me an email at asambrano@tradecaptain.com, or you can just send a WhatsApp message to this number here as well. Have a good day, guys, and I'll see you guys tomorrow, same time here at the live training room. Thanks.